April. It's the beginning of Q2 and historically a great month for crypto, but this time something's different because instead of optimism, we're seeing panic, fear, and talk of a full-blown tariff war. Bitcoin just got rejected under 84K, Solana failed at $145, and across the board, investors appear to be bracing for a recession. But here's the twist. Whales are buying, global liquidity is rising, and some analysts think that we've already bottomed. So here's what the experts think about Liberation Day, what the whales are doing with their money, and what's next for Solana in 2025. Welcome to Liberation Day. Let's start with market updates because the charts are looking rather bleak here. We just saw $160 billion wiped out from the crypto market cap before Liberation Day, and prices are still dropping. In fact, Sol, ETH, and XRP have all recorded double-digit drops in the last 7 days alone. Bitcoin got rejected hard, and Solana's recovery fizzled out at $145, only to crash back down to $125. ETH has actually dipped to dangerously low levels of around $1,800. But have we bottomed, and are we seeing a trend reversal already?
That it takes, at the moment, it would take a break above 84,661 to indicate a low is in. Not only a break, but ideally an impulsive break. So a break in 5 waves. So far, this looks like a corrective rally. So I would need to see something like wave 1, wave 2, wave 3, wave 4, wave 5. If we see that, I would start to assume a low is in, then already a little earlier than expected, because in this pattern, one more low at least remains likely, but only as long as the market holds below 84,661. So above that level, probabilities shift, and the bulls are starting to take the lead.
So, not quite a confirmed bottom or a trend reversal just yet, because Sol has now tried twice to reverse the downwards trend and failed miserably both times after looking shaky, to say the least. The first attempt was the short-lived pump that we saw on March 1st and 2nd, following Trump's announcement that the strategic crypto reserve would also include Sol, among other assets.
Prices for Bitcoin and the like have soared after Donald Trump set out plans for a US cryptocurrency reserve. On Sunday, he said in a social media post that the stockpile would include Bitcoin and Ether, as well as smaller tokens XRP, Solana, and Cardano.
And more recently, we saw last week that Sol tried to rally back out of that support range and upwards towards $150 and was firmly rejected at $145.
When we're looking here at the larger time frame, we can see that the market is currently in an important Fibonacci support zone between $102 and $131. So I'm watching here still for a potential reversal. And a lot of people are bearish right now. And yeah, I mean, by all means, the trend is not up yet. We're still in a downtrend. We need to understand that. That's a very important part of it. I still highlight the potential for reversal here because the wave count, the structure to the downside looks technically complete. The next rally could either be a B wave in the white scenario, which is a corrective rally, which could then lead to another move down, or it could be directly the rally to new all-time highs. So there is going to be that sweet spot where these two scenarios will move away from each other, but we are not there yet.
Now, for anyone that needs their daily reminder that crypto's volatile, here is a Solana chart from 2021, and it shows a 61% drop before that absolutely parabolic rally to over $200 last cycle. However, some people have dismissed the short-term price action and all the technical analysis altogether, and instead they argue that Bitcoin and alts have decoupled so much that we're not even in a bull market for altcoins anymore. But zooming out for a second, some major points to be made here. One is about the impact of global M2 money supply, or even simply the money supply in the top 5 economies of the world. We see that it's already bottomed out and it's actually steadily rising. In fact, money market assets are up over $850 billion in less than a year. And we know from history that crypto prices and risk assets in general will likely follow this trend with a 10-week lag.
A massive injection of global liquidity that's already happened. This is really important. It's already occurred. This run-up in global M2 liquidity is tremendous. It's similar to the run-up right here, from here to here, where Bitcoin went from $60,000 to over $100,000. That's the magnitude of this run-up.
And the second point is about the definition of a bear market, because some would argue that a 20% drawdown signals a trend reversal and that we're entering a bear market. But crypto is insanely volatile compared to traditional asset classes. And that means two things. One, people will take profit on the way up, And 2, drawdowns, massive ones even, are to be expected.
We're still in the earner innings. I think there's very stiff inflows from ETFs buying about 2 times the Bitcoin mined per day. MicroStrategy and the other Bitcoin treasury companies buying another 2 times. And the retail buyers and dollar cost average investors. So really there's a lot of inflow. I think temporarily there's some consolidation because some earlier investors, sort of midterm investors, profit taking.
And on the second point, all we have to do is look at the chart of previous bull run drawdowns to see how many 20% plus pullbacks we typically see within a bull run. So by this logic, no, we're not yet in a bear market and can in fact expect to see another 20% plus pullback this cycle. So to recap, here are the 3 reasons why we're likely not in a bear market yet. The first reason has to do with the bull market's support band, which we've just dipped under. However, based on previous dips, when we see that the macro outlook is bullish and that whales are still accumulating, we can expect a recovery.
Whenever it gets a drop below the bull market support band, usually the result in the short term is sort of a rally back up to it, right? And we've seen that happen many times, right? The sort of that initial drop below the bull market support band, you consolidate for a little bit, you get the rally back up.
One of the most important macro factors that's important to keep an eye on here is global liquidity and M2 money supply. As we can see here, Bitcoin tends to follow global liquidity with a 75 to 105-day lag time. Especially on higher time frames, this correlation turns out to be freakishly accurate. And the third reason is how oversold we are and how much fear we see in the market despite the bullish outlook for Q4 of this year. So what can we learn from all of this? If, like me, your professors kept banging on about Nasib Taleb's magnum opus, his book called Black Swan, then you're more than familiar with the notion of improbable and extreme events coming true and essentially destroying financial markets. Just think back for a second to COVID-19. Nobody could have predicted the magnitude of the event or the outcome. It's a true Black Swan event. Now, the S&P 500 bottomed out in March that year, only to reach a new all-time high by September of the same year. So we could be seeing a similar event play out this year. And as this threader puts it, there is always a chance that we see a crazy Black Swan event and every financial market nukes. But as long as the macro environment continues trending in the same direction, I think we're in for a lot more fun this cycle. All right, so to recap, BTC is down, Sol's down, and ETH is still struggling massively. Most Solana verticals are also down well over 20%, but somehow we are not in a bear market. That's a confusing place to be in this cycle. So let's bring some clarity to that and figure out where prices are most likely to trend towards following April 2nd's tariff announcements, aka Liberation Day. Because the timeline looks like a ghost town at the moment, and we're here wondering if there are even any bulls left. So here's a quick and painless breakdown of what bullish and bearish price action scenarios could look like in the coming weeks. The bearish scenario could unfortunately see us retesting the $100 to $105 range, while the bullish scenario sees number go up to around $180 to $220. Now, the more pessimistic scenario here is that if Bitcoin breaks to the downside and it spends a significant amount of time trading at around $70,000, then assets like Sol could see a further 20% drop to even as far as $90 a pop, although this seems fairly unlikely for a number of reasons that we're about to discuss. But before you turn into a bear and start aggressively shorting everything, let's very quickly address that pessimistic outlook and actually think about this worst case scenario. Because another major concern driving this pessimistic outlook, and of course the idea of us going much, much lower, is the tariff concerns. Now, people are worried sick that if Donald Trump goes harder on tariffs than anticipated, this could push us into a wild recession, which of course would be extremely bearish for risk assets like crypto. But here's what the experts think.
Just how much economic impact should investors start to price in? Should they be anticipating a recession?
We think a recession is far-fetched. There's definitely going to be an impact on growth. There's definitely going to be an impact on inflation, and we've taken our growth numbers down and we've put our inflation numbers up. But compared to where the US economy was and where we would need to be to see a recession, we still think there's a long way to go. So we think recession is far away.
And here's another take from Arthur Hayes on how tariffs could actually impact crypto prices.
So tariffs don't matter anymore to Powell, and they shouldn't matter anymore as crypto investors. If Trump does 50% or he does 2%, it doesn't fucking matter, because we know that Powell's going to continue to provide the monetary conditions, the easy monetary conditions that we need to have our portfolios go up in value in fiat dollar terms. So those three things as I sort of thought about it and listened to some other commentators, maybe extremely bullish on the new trajectory of crypto. And I think that on balance, we probably hit a bottom of 76,000. Does that mean that we're not going to retest it? No, of course not. But if I had to make a bet, I would bet that we go higher rather than lower.
And finally, here's another take on the recession that argues our current situation looks very similar to summer of 2024, which of course resulted in a delicious rally to the upside. Financial conditions have been easing, the dollar has weakened considerably, most indicators point to continued business cycle expansion, favorable seasonality for US stock indices, and finally, the analyst also points to the absence of real concerns in the credit markets too. So what's really going on here? What are the big bucks really doing with their money? To quote Nassim Taleb again from a different book this time, don't tell me what you think, tell me what you have in your portfolio. In other words, say whatever you want, but show me where your money is. And I think this idea is particularly critical right now because sentiment has been at an all-time low for months, but institutions are still secretly buying, while it appears retail is capitulating and selling at a loss. Now, we also know that for years, JP Morgan CEO Jamie Dimon was publicly shitting on crypto, calling it a hyped-up fraud, while it turned out JP Morgan was actually leading the charge behind closed doors.
I've always been deeply opposed to crypto, Bitcoin, etc. You pointed out the only true use case for it is criminals, drug traffickers, anti-money laundering, tax avoidance. If I was the government, I'd close it down.
Now, it's worth pointing out that Jamie Dimon, the most important and influential man in international banking, was saying this only a year and a half ago. So it should absolutely come as a surprise to hear that 1 year before Jamie Dimon's statement to Congress, JP Morgan had already been exploring DeFi as the next generation of finance. So as Nassim Taleb argues, we should be much more concerned with what the world's largest institutions are doing rather than getting bogged down in what they're saying. Look here, for instance, in the last month, whales have added 129,000 BTC since March 11. Momentum's picking up sharply over the past few days, and that's the largest accumulation rate we've seen since August 2024. Arguably, this signals growing confidence from the larger players. Now, there are those who say, okay, fine, but crypto is now super correlated with traditional markets. And if we are going into a recession, all crypto prices will crash, probably even more dramatically than the stock market's most overvalued stocks like Tesla, which has already seen a massive pullback from almost $500 a pop to where it is today, trading at around $250 and valued at half its peak market cap. So zooming out from the world of crypto and looking at macro conditions like unemployment in the US will also support the hypothesis that we are not, in fact, heading into a wild recession, at least not just yet. So the big question is, how did we get here and what's going to get us out of this rut? Because crypto's felt painfully dull for most people ever since we round-tripped the Trump pump and the meme coin casino came crashing down. The scams got too big, crime season hit too hard, and Solana's reputation took a real beating. But today it feels like we've hit another inflection point, one of unprecedented legitimacy. Hear me out, because beyond everything that we've covered so far, two major developments signal a turning of the tides. BlackRock is bringing its $5 billion Biddle fund to Solana, and Nikita Beer, creator of viral consumer apps like Gas, is joining as an advisor to early Solana startups. Now, BlackRock, it goes without saying, is the world's largest asset manager with over $10 trillion of assets under management. These guys don't play games that they can't win. So what they're saying is, sure, there's noise out there, degens are killing each other in the trenches, but what we see is an immutable, decentralized ledger with a possible 1 million TPS. And that is the type of potential that we want to invest in. And on the other side, you've got people like Nikita Beer saying, I built an app that made $5 million in 2 months with zero marketing. And now I'm going to do it all over again, but on Solana. So even if you don't love BlackRock, this is the dual legitimacy play that Solana really needs right now. Institutional validation on the one side and viral consumer vision on the other. As Kaiser so eloquently puts it,
institutions like BlackRock bring credibility, and consumer app veterans like Beer bring usability.
So can April still deliver a bounce? Historically, we've seen 27% returns for BTC in April alone, but 2025 conditions aren't like previous cycles, and the sentiment mismatch that we're seeing might cap gains for BTC and Sol. However, the average sell pressure for BTC has dropped from 81,000 BTC a day to just 29,000 BTC per day, meaning sellers are dried up, and April could turn into a consolidation zone, sort of like a calm before the next impulse. It's all going to be decided in the coming days and weeks as we see whether or not a massive tariff war drives us into an unlikely recession and whether or not assets like Sol are indeed on the White House's Christmas list.
All I know is this: we're going to take in hundreds of billions of dollars in tariffs, and we're going to become so rich, you're not going to know where to spend all that money, I'm telling you.
All in all, it's noisy out there, so I want to leave us with possibly the wisest take of them all. All of us suffer from confirmation bias, likely a multitude of other biases too, that are known only to those who dare enter the trenches. Now, we're likely going to find evidence to support whatever we want to believe regardless. So it's important to be positioned appropriately for the coming months and to not invest more than you can afford to lose. I want to thank you for tuning in to Solana Floor, and I'll see you next time for more updates from across the Solana ecosystem.